Let's talk about growth in Indian financial market. Let's look about and learn how Indian financial market determines the transformation and investment opportunities for the people of this country. Now, we all know that Indian economy is dominant on agriculture. However, in the recent past, it has moved from agriculture to service and manufacturing. Today, service and manufacturing drive 75% of the GDP, although more than half of the population is still engaged in agriculture. India's economic transition from agriculture dominance to service and marketing is an important factor to understand how the economy has changed over a period of time. Rapid urbanization and rising income has increased the demand for more complex financial products. The financial system growth by efficiently mobilizing savings, invest. It has linked the surplus capital to provide productive assets, enabling innovation and entrepreneurship. In order to understand the GDP contribution in financial system roles, we need to give and have an investor insight into the macroeconomic trends and market opportunities. For that, we can read the Economist Survey of India or the Reserve Bank of India notifications, the bulletins. By this, we will understand how financial markets influence everyday cost. For example, change in the forex market determines the petrol prices. Your insurance determines your saving habits. So everything is interlinked. In order to understand Indian financial market or any market in the world, you need to have a macroeconomic perspective. The major things that are happening in the market. Now, if we talk about the Indian financial market, it acts as a bridge. It is channel wherein these surplus funds with the investors go to borrowers, that is the businesses. And this is how eventually the flow of money happens. The people who have money give to the people who do not have money. That is the businesses. People who have money are called the investors. So the markets are mainly categorized into short-term market, that is money market, which is less than 1 year, and capital market, that is the long-term market, which is equity and debt. Now, primary market is a market where new companies come and list themselves. For example, if a new company wants to raise money from the market, they will come up with an IPO in the primary market. They will get listed. And once they get listed, their shares can be traded in the secondary market, which is already an existing securities market. So, two types of markets is money market, which is for short term, and capital market, which is for long term. Also, there are different banks, brokers, mutual funds, pension funds, and depositories that take part on the financial market. So now have better knowledge and information on which companies are coming in the market, new companies. You can track the IPOs to an. You can also understand how mutual funds mobilize small savings into capital markets. Now, another important aspect is the regulators of Indian financial market. We all know Reserve Bank of India is the bankers' bank. Reserve Bank of India is a bank which is regulator of all the banks in the country. Reserve Bank of India follows and break the monetary policy. It regulates the foreign exchange, currency issue, and payment system. The second important regulator is SEBI, Securities Exchange Board of India. Now, SEBI looks after the security markets, that is, the stocks, the bonds, the intermediaries, also prevents fraud in the share market. So everything related to stock market is regulated by SEBI. Now comes insurance, which is Insurance Regulatory Development Authority of India, IRDAI. This institution is responsible for regulating the insurance products, intermediaries, and ensures that the policyholders' rights are protected. We have PFRDA, that is Pension Fund Regulatory and Development Authority, regulates incubation scheme, which the new employees now get these days. Also, we have Ministry of Finance that handles macro policies, banking, insurance reforms. We have MCA, that is Ministry of companies that coordination for financial stability. ROC, companies registration and compliance, and SRO, which is self-regulation under SEBI guidelines. Now, these are some of major institutions that take care of the entire financial system of the country. So we need to understand and learn from these institutions how they regulate the entire market. What are different types of developments happening in the regulatory sector? In order to have better understanding and knowledge about what is going around all of us. Now, let's study the structure of financial markets in India. If we talk about the banking system, the core of financial system is mobilizing savings and allocating credit. So what the banks normally do, they collect funds from the people in form of savings, and they use the same fund to give credit, that is loan to the people. So the rate of interest which they give to the people on saving account and the rate of interest which they charge for the loan, the difference between them is the profit which the banks normally make. And what types of banks we have? We have scheduled commercial banks, which is public, private, RRB, and foreign banks. We have cooperative banks. We have small finance banks, which promotes financial inclusion and facilitate digital transactions. Cooperative banks focus on serving rural areas and local community financial needs. We have non-banking financial companies, housing financial companies, and P2P lenders. These bad type of banks, they address the credit gaps for the underserved market segment. Then we also have money market instruments, wherein big corporate houses and businesses borrow loan on short-term basis, which is commercial papers, treasury bills, etc. We also have credit information companies which maintain the borrower's credit data in form of credit report such as CIBIL, Experian, Equifax, etc. Another concept which is coming up these days is account aggregators. They are fintech companies who have consent-based financial data sharing authorized by Reserve Bank of India. So if you really want to understand the financial system and different regulators, you can compare different types of banks, NBFCs, and payment banks and small finance banks. You can also understand your own CIBIL score by downloading it free of cost and ensuring what are different charges or how your credit score is prepared. We also have securities market under SEBI. We have already discussed that. SEBI regulates the stock market, that is share, bonds, derivative, mutual funds, government securities, etc. As I discussed, we have a primary market which raises the capital in form of IPOs. Secondary market, once the company is listed, the stocks get sold in the secondary market. They get traded. So secondary market is responsible for liquidity and price discovery.